AI is pretty much everywhere now. It has become almost impossible to browse social media without having an AI-generated video thrust upon you.
Now, when you're cooking burgers in the forest, you always want to make sure your pan is nice and hot first.
And it is hard not to ask ChatGPT to write an email for you. I would say it's definitely life-changing, just like the internet in the early 2000s. Companies are pouring trillions of dollars into AI. Meta is going all in, not just investing $14.3 billion in scale AI, but also building AI data centers the size of Manhattan. Tens of startups with little to no revenue are raising billions before even going public. And the last time new tech got this hot this fast, it didn't end very well. In the early 2000s, investors poured money into anything with a .com in the name. Pets.com, eToys, Webvan, all gone. And today, companies are swapping the word blockchain for AI in their pitch decks. At least the internet, even after the crash, created millions of jobs, entire industries. AI seems to be prepping to take over those jobs. Of course, AI didn't just appear out of nowhere. In the 1950s, Alan Turing was already asking whether machines could think. In the 90s, Deep Blue beat the world chess champion. In 2012, deep learning got serious, and by 2022, ChatGPT made it go mainstream. Suddenly, AI wasn't just for researchers or coders, anyone could use it. And after ChatGPT, the floodgates opened. Copilot, Claude, Gemini, DeepSeek, 11 Labs, and recently also AI agents that can perform tasks autonomously. Even Grammarly, Canva, and Notion added AI into everything. Investors saw the momentum and threw billions at anything AI branded. And obviously, we could see that reflected in the stock prices. Let's look at some examples of AI-related companies. First off, NVIDIA. It's now worth over $4 trillion. That's more than Microsoft or Apple, which also are, by the way, frantically trying to fit into this new AI realm. After ChatGPT launched, NVIDIA's price skyrocketed, peaking at nearly 2,000% of its base value. And then you've got Palantir, trading at like 600 times earnings now. Supermicro, another chump, also popped off. Not as hyped as NVIDIA, but it's making banks selling all the servers and hardware AI runs on. And to be honest, it's not just about the few stocks, because the whole market is kind of being pulled by this. The Magnificent Seven, so NVIDIA, Microsoft, Apple, Amazon, Google, Meta, and Tesla, now make up a third of the S&P 500. And recently, they drive a majority of the index's growth. So yes, prices exploded. But the question is, are these companies actually worth that much? Valuations are high, but not .com crazy just yet. The Nasdaq is trading around 28 times forward earnings, well below the 70 times peak in 2000. And the S&P tech sector sits at around 29 times, which is high, but still under the around 50 times levels seen during the .com bubble. And how about some specific names? So take NVIDIA. Right now, it's trading at a PE of around 45, which basically means investors are paying $45 for every $1 it earns per year. Not cheap, but somewhat justified, especially with a PEG ratio just over 1. So the price is more or less in line with how fast it's growing. Now, Palantir is a whole different story. Its PE is about 600, which is, you're not buying it for what it earns today. You're buying a dream. Government contracts, AI dashboards, and the PEG is over 4, meaning you're paying a premium even if the company grows. And then there is Supermicro, the one everyone slept on. It's actually way cheaper. P ratio is around 25 and the PEG under 1, which is pretty rare in this market. So some of these stocks have real demand, real earnings, but many others, you're betting on potential. And that's exactly where bubbles love to form. Back in 2000, Cisco was trading at a PE of nearly 200 and a PEG around 7, seen as the tech future, until the dot-com bubble popped and it took over a decade to recover. And let's not forget, building out this AI future won't be cheap. Morgan Stanley estimates that unlocking the full potential of generative AI will require around $2.9 trillion in global data center investment by 2028. In 2028 alone, annual spending could top $900 billion. For perspective, that's nearly as much as the entire S&P 500's capital expenditure last year, which came in around $950 billion. So yeah, bubble signs? Totally there. But at the same time, this might actually be very different. Because unlike crypto or NFTs, AI is already being used like everywhere. Big companies already integrating it, startups building with it. Your job probably touched by it already, whether it's customer service, design, writing, or data. There is a lot of hype, but the base is strong and only getting stronger. The question is, can the reality catch up to the expectations?